Well, we finally got the rate increase we were looking for in 2016. How many will we get in 2017? How will the new administration figure in? We'll talk about that today on Naroff Notes. Joel, welcome back. Thanks for being here with us again today.
Well, thanks for having me, especially now when there's so many interesting things that are going on that will affect the economy in the next year.
That's right, and we know we finally got our rate increase in 2016, and now we see from the famous dot plot that we're looking at maybe 3 increases next year versus September where they thought 2. What do you think is going to happen next year?
Well, I'm proud of the Fed. They're acting like a Swiss watch here. Every year in December, whether they need to or not, they raise interest rates by 25 basis points. But seriously, it was time that they did that. We thought it would happen earlier this year. And indeed, keep in mind, a year ago, last December, the Fed indicated in their dot plot that they could have 2 or 3 rate hikes during 2016, and we only got 1. So I wouldn't go to the bank on the fact that they're going to have 3 increases in the next year. That said, I think there's a high probability that will occur. And part of it is that Chair Yellen made it clear at a press conference that the Fed's pretty comfortable with the condition of the economy. They think the labor market is pretty much at full employment. There may be a little bit of slack, but not a whole lot of slack left in the labor market. That inflation, while it's not quite at their target rate, it's moving up, and the factors that restrained it, energy, are dissipating. Indeed, I expect that the Fed will reach its target in the next month or 2, given those increases we have already seen in oil prices. So the Fed's comfortable about the economy, unlike they were a year ago.
Okay.
And that tells me that there's a high probability. And then we have to add in, of course, what the Fed doesn't know and what we're uncertain about is what's going to happen with the Trump administration and fiscal stimulus.
Absolutely. That's my next question. That's obviously the elephant in the room, and we hear about the stimulus that's supposed to take place and infrastructure spending and tax breaks, and that's far from a done deal. Obviously, I mean, what do you think the effect is there?
Well, as I like to say, there's no such thing as a free government policy, whether it's something that's restrictive or expansionary, and cutting taxes and spending on infrastructure and reducing all the regulations. That's a pretty expansionary policy. And that's going to have the economy growing faster. There's no question about that. The problems we have is we don't know the extent to which that's going to occur. Part of the problem is that it raises the budget deficit, and we have to deal with that. The other issue, as far as the proposals are, is that if we have an economy that's close to full employment, that inflation's already at 2%, and you have it suddenly accelerating, what's going to happen to wage gains? I mean, we could be seeing 3% growth as a result of that, which would be quite solid. I mean, really solid. But that would trigger more inflation, and that'll make sure the Fed moves at least 3 times, maybe even more than 3 times. Indeed, the markets, the longer end, is already building in extensive stimulus that causes inflation to go up, and that's why we've seen, at least in part, the large rise in interest rates. So it's going to happen. We just don't know how much, and that's the uncertainty.
Yeah, that's it. And we were supposed to have this big negative reaction if we had a Trump win, and we saw that for maybe 30 seconds,
right.
And then everybody got euphoric again, and you see the markets doing well. I mean, what do you think the risks are there?
Yeah, and I think the risks are actually on both sides. The risks are we get what was proposed, or we don't get what was proposed. I mean, there are real facts that we have to deal with. For example, as I mentioned, if we get what was proposed, this economy could be a lot stronger than most economists expect. It's going to take a while. I mean, we're not going to get any stronger growth in the first half of the year. Sure. No matter what happens, it'll be in the second half of the year, more in 2018. But that stronger growth in an economy that's already pretty much at full employment and inflation rising could trigger the higher inflation I talked about, and therefore higher interest rates. And the Fed doesn't want to see that. So that's a real risk if we get what's been proposed. If we don't get what's proposed, then there's going to be a lot of disappointment. There's no question that a lot of investors are assuming, because the Republicans have the presidency and control of Congress, that all these great things will occur. But as I said before, tax cuts create wider budget deficits, and we could get a budget deficit that's $1 trillion or more from these proposals, and is it going to be implemented? Okay. So there are risks of disappointment or satisfaction, but both have impacts on the economy.
Absolutely, and we'll see what we get. Unfortunately, we're out of time for today. Certainly going to be an interesting year next year to see what shakes out. So again, certainly appreciate your time and your commentary, and always great to have you with us.
Well, thanks for having me, and it will be an interesting year no matter what.
Everyone, thanks again for tuning in to Naroff Notes, and as always, thank you for watching Fine Action.